Hey traders, this is Ron Hayden, Market Tamer. Happy Sunday. Hope you're having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. We'll kick off here with the SPY, which is something I have a long-term bullish position in. Now, for this past week, 4 of 5 days finished higher. Though we didn't exactly make a tremendous amount of upside movement. If I zoom in a little closer here, you can see we did get out of the box. There's Monday right there, Tuesday, Wednesday, Thursday, Friday. I mean, frankly, you could say, 2, 4, 6 out of 7 days we've been up, even going into the week before. Now, the only down day this past week was Wednesday, and that was a bigger down day. But again, if I zoom in, we stayed above the 5-day EMA. So heading into this week, the bulls get the edge. They'll be the ones in control. The target now is going to be the swing high, I should say the closing high from January 26th, which is right around 284. So we're looking at about, ballpark 50 S&P points higher, give or take a little bit, $5 on the SPY. Now, if we look at the diamonds, which is DIA, we can see they also have been up 4 out of 5 days this past week, but they're still caught in the trading range. They're lagging, but hey, they're above moving averages. And the SPY is broader. It's at least 500 companies. If we go to the Qs, fresh all-time highs, 4 of 5 days. Volume here, nothing bad considering it's the summer for sure. We remain in this channel. So we're not, I wouldn't say wildly bullish, but we're doing just fine on behalf of the bulls. Now, the two indexes that are currently lagging are the Russell and the mid-caps. So if we look at the IWM here, they were down 3 of 5 days. They were only up 2 days. Down 3, net for the week, we finished just a teeny bit lower. As it stands right now, I could do this on the Russell just to give you, a little visual picture. That's the resistance area, the swing high from late June, and then now here in the middle of July. If we close above 170, this would be bullish. Now, mid-caps, MDY, same thing, down 3 out of 5 days, but we essentially finished right on the 5-day. If we would need new highs, closing highs, and that would be 365.39. We're only 2 points away, so it's not far at all. If we look at the VIX, we're almost down sub 12. We're at 1218. This is bullish for equities. Taking a look at something we haven't looked at in a while, which is the Brazilian ETF. This thing, like the US market, put its high in January, and then it tried to double top in February, and then it's been pretty much downhill. Over the past couple days now, we're spending time above the red line, which is the 20-day EMA. The 5-day in blue has crossed up through the red line. That is a technical buy signal. We had a nice little pop on Friday, closing near the highs of the day. The 50 days the target. We get through there, the 200-day becomes the target. For a potential, maybe swing low situation, I could start considering the 20-day EMA as a potential trailing stop if I wanted to be bullish from a swing trading perspective. Maybe even some bull puts down at this level. The short put down around 30, 31 at the most, but pretty much 31 or lower. All right, how about some other stocks you've been watching? Walmart, nice day on Friday. If it gets above that 200-day, gap fills the target up north of 100. So I'm still watching this one. The one thing I don't like is the OBV is really not coming along for the ride. We see the stock, curling up here a little bit. Yet OBV is essentially flat. Not a bad thing, but it's not a great thing. Let's see what happens when it gets above the 200-day moving average. We take a look at Tesla. Now this thing is really getting nuts. There is an earnings report coming up here at the end of July, still 2+ weeks away. There's all sorts of bad press. Now, I'm not trading this stock, but if I would be, I'd be very careful. I'd be thinking collar trades. I'd be thinking maybe some protective puts, because the stock went from 360 to 310. That's $50. That's like 15% in about 2 days. It was as much as 20% over 3 days. And now we've popped up here just a little bit. So your range arguably is 370 down to 250. Just heads up with all these news. If some of, especially the negative news, it just comes out to be a real deal, and they're talking about factories and tents and cash flow issues and all that good stuff. I know one article had Musk buying more shares. That helps send the stock higher. There's just a lot going on here. Just be careful. How about MELI, which is Mercado Libre? I highlighted this stock this past week. Follow through on Friday. It's starting to run. Volume got better than even the day before. So we've taken out the 3 25 area. We're at 327. There's going to be a little overhead supply here around 350, but up there is the real target. Again, I would consider potentially a 20-day EMA here as a trailing stop, maybe even considering bull puts down here, maybe the 285-ish area if there can be any credit found. Now, how about RH? I just stumbled across this stock. Gapped up on earnings in June. Nice light volume pullback, which is what you want for a bull flag. Look how the volume just kept dropping, essentially. And now it pops on an up day. The volume gets above, frankly, all the volume since the earnings gap. Target would now be 160. That's like 17 points higher. The swing low right here at 711, that close was 132.78. That's probably where I put my trailing stop if I wanted to be bullish on this one. OC, Owens Corning. Watch for a potential gap fill up into the mid 70s here. It did have a nice earnings pop, but there also was an earnings report coming. Excuse me, let me back up. It had an earnings gap down, and then it had a Friday move pop higher. Earnings is coming up on 7/25. It's only 10 days away. Maybe it's going to need earnings to send it up. But if this thing doesn't gap up and fill the gap down from April, and maybe it just starts getting up towards 70, that's a nice little ballpark 8-10% move here on OC. I like Walmart. I like MELI in terms of distance to travel, but Owens Corning popped up on my radar after it's starting to look a little better here. And then ATHM. I would like to show you this one just because if I drop back a year here and I go in from maybe December, you can see how this just keeps cycling higher, right? We go up, we come down, we go up, we come down, we go up, we come down. You get the idea. But then the volume comes in like it did over here, but we actually broke moving averages in June. That's the difference. So here on Auto Home, we break down, we try to get back up and can't. This is the signal that a trend change may be upon us. We're hitting our heads one, if I zoom in here, 1, 2, and then on Friday we hit our head again, 3 days, and we're starting to roll over. Once this support at 95 falls, the 200-day down in the low 80s would be the next target. And just heads up, we are in the midst of earnings season. This coming Friday will be July monthly expiration, but Netflix is coming into earnings on Monday. Thinkorswim has it at noon Eastern. I went to CBOE. There's no time given. You wonder, I shouldn't say you wonder. I get a lot of questions wondering why a stock like this would just gap down when the market was actually up. It's all about this amazing run it's had since January. We flagged this stock due to seasonality way back here, and it's been absolutely incredible runs. I flagged the breakout here too. That was another 60, 70 point straight run. It's just creating a top here. I know it looks like a double top. I know there's two gaps involved. I know the volume, the red volume is getting bigger. Right now it's profit taking in my opinion. The earnings report, we could easily gap down. It could always go to 0 too, but it could also gap up and go right back up to new highs. So no matter how bullish or bearish I am on a stock, I guess you could say more so bullish, I'd still want that protective put even if I was so confident that it's likely to go higher, because if it doesn't, this is how portfolios can get destroyed. So just keep an eye on that. Typically what I might consider doing is if I go to the trade screen, I type in Netflix, and if I wanted to try a protective put here, usually 60, 90 days is enough. Right now, September's at 68. I'd come in here and consider something near the money. So maybe 390, 395. And right now, a 390 is costing about $2,500 a contract, 25.15. If this stock drops 100 points, you'll quickly see, or even 50 points, you'll quickly see how these puts can really save your bacon. All right, so I'll have a follow-up on that. We'll see if Netflix does gap lower, and if it does, what the put would look like. Now, from an upside perspective, let's just say I was really bullish on Netflix. I wouldn't have any short calls in place, because if you've traded Netflix long enough, this thing can have 10% gap higher and potentially even more. If I really wanted to try and do a short call on Netflix, the minimum upside would be 10%. So if we assume this thing's at 400, we'd be looking at 440 short calls at the very least. And, maybe even instead of going 440, jump to 450. Right there, it's at least $1,000 a contract. Almost $1,100 a contract. If we use 450, specifically $1,050. So that would pay for, almost half of that protective put. That's another way to look at it. But once a collar trade is in place, more specifically the covered call, now the upside is capped. So this could be a great example of putting in a virtual trading portfolio and seeing how the stock's reaction up or down changes option values. And that way, the next time you come into an earnings report, you can decide on your own, of course, with a financial advisor, not me, what you might want to do. So again, try that in a paper trading portfolio. Maybe you want to do that exact color trade in a virtual portfolio and then see what happens to the options. Because one of the next most important things is, what if Netflix doesn't do anything in terms of movement and it goes nowhere? Well, this option is going to collapse and so is this one. And if the stock doesn't go anywhere, you're often going to be very happy a short call was used because the loss in value here is actually a gain, right? But that helps offset the major loss that could potentially occur there. All right, that's it. Video got a little longer there with this Netflix example. Hope you find it helpful and wish you guys a fantastic week ahead. Take good care.